you've grown Magellan into a fantastic business. It's clearly one of the behemoths of Australian funds management. Can you keep investing the way that you do if you keep growing the way that you are?
Well, if you think about our global equity strategy, we have at the end of 2017 effectively closed it to new institutional clients. So we have about 60 billion Australian in funds under management in the global equity strategy, and outside our sort of retail business, which effectively almost offsets any sort of natural attrition we get on the other side of the book. For all intents and purposes, we've closed that. We've closed the global equities outside the retail business in Australia. Our infrastructure business is not closed, but it will close as well. Does that stop the business growing from a Magellan point of view? No. What we would say is if we can continue to generate very acceptable investment returns, and let's say on average between infrastructure and global net of all fees, we can deliver 8 or 9% per annum in that strategy. That means every 8 to 9 years we would be doubling funds under management, yet not taking any new clients on board. And if we can grow our revenues at 8 to 9% per annum, and I talked about the Petersburg paradox here, and we have a free cash flow yield, which is our dividend yield, of around 4%, that's around 12% per annum. We don't do anything else in our business. Am I concerned with the amount of money of $60 billion that we can't generate alpha with $60 billion? I'm finding no issues with that at the moment in terms of what we're doing within our universe. And frankly, what will happen is all these companies we invest in, it just inflates. So our universe effectively stay static with markets growing and the profits of these companies growing over time. And then from a Magellan perspective, there's incremental things. We're probably going to announce a retirement product at the end of this year. Hopefully, obviously, working through some pretty complex issues, and it's been going on for a few years. We've got our sustainable strategies out there, and if we and infrastructure is not closed at the moment. If we can own a point or two of funds under management growth, 1% of funds under management is $800 billion. But if we can grow at a few extra percent a year, a few $1 billion a year of new funds under management, you add that to 12%, you're up near 14% total return. So no, from a Magellan point of view, I'm not concerned, and from the strategy point of view, effectively when we closed the core global strategy to institutional investors, I'm very relaxed around those numbers. But we couldn't have taken in 100 billion of funds under management in that global equity strategy. Okay. So there absolutely is a cap that you have to think about in terms of liquidity in order to generate alpha in what you do.